Hey everybody, Jeff Sutherland here, and my business partner Chase Waldron with the Jeff Sutherland team at eXp Realty, and we're here to give you your monthly market update. I want to talk about the fires in California. Everybody's asking us about these fires that are happening over there and how they're going to impact real estate in Arizona. I do believe they're going to have an impact. I don't think they're going to be as big as they would have impacted us about a year ago, but let me show you some of the data. That way you can get a good feel for what's going on in Arizona real estate. And you can see the immigration patterns coming into Arizona. If you notice, the lion's share of people coming into Arizona is from California, and it's been that way for a long time. This was between 18 and 22. You can see a lot of that migration happening. Now, interestingly, because of these fires, a lot of them happen to higher price point homeowners. It was very tragic. And so my thoughts would be that the luxury space will pick up because a lot of these people that are owning $5 million to $10 million houses may be able to get that same house that existed on the hills of California for less. And because of so many other factors, I think this might be the breaking point for so many of them to move to Arizona. So you may see some luxury pickup in the Arizona market, but I don't think it would impact us as much as it would have been like a year ago when we had less inventory. In fact, the news has been talking about it quite regularly. The director of ASU, Mark Stapp, said that this could lead more Californians to consider relocating to Arizona, particularly to Phoenix, which has been historically attractive because we have better prices here. So we already have a scarcity of inventory in Arizona, so this will be even more pressure on that, which will put more pressure on prices. So I don't see prices going down in 25, especially if the rates slowly go down. So speaking of rates, Chase.
Right, mortgage rates. Everybody's been watching the mortgage rates. Obviously, mid-January, we were at a 7.26, and now they have trickled down slightly to a 7.08 here at the end of January. At the latter part of last year, they ticked down, high sixes, but they have came back up, and we continue to watch these. And as you look at all the analysts right now, that they are saying that they might not be trickling down as fast as we had anticipated throughout this year. They think throughout the remainder of this year that we're going to be in the sixes. So if we end up low sixes by the end of this year, we do anticipate a lot more transactional volume. Even here at the start of this year, with rates being up over 7, we have gotten busier. There's a lot of people that are out making moves, wanting to do things. So we anticipate that, being at the lower sixes will definitely increase that volume. And something to keep in mind, even right now at a little over 7, over the last 50 years, the average, we are still below that. The average over the last 50 years is about a 7.7. So we are still under that. So just something to keep in mind as we move forward this year.
In fact, Chase, didn't you get somebody in at a 5.25 under a new home construction build recently?
Yeah, so new homes right now, a lot of these new builders are trying to be competitive in the market, and they are currently buying down the rates themselves. And we were able to get a guy in at a new build in Surprise with a 5.25 interest rate. So thinking about how market is right above 7 right now, being at a 5.25 drastically decreases his monthly payment and really, makes it more affordable for people. So that's how these new build communities are staying so competitive right now.
Yep, and we do know all the deals out there, all the builders and what they're offering. So come see us and we can let you know what's out there.
Yep. This accepted contract. So here in Phoenix, Maricopa, and Pinal County, we follow a seasonal trend for transactional volume count. At the end of the year, 2024, you can see that red line drastically decreased at the end of the year. People are, traveling for the holidays, buying Christmas presents, so transactions, seasonally go down during this part of the year. And then here we are in 2025. You can see the blue line on the left part of the graph. It's spiking up as it has in the years previous. These first 4 or 5 months here in Phoenix, when the weather's nice, people are here doing things, transactional volume is up during these 4 months. So just following that seasonal trend, it's no different this year than it has been in the years past.
And speaking of supply and demand and activity, if 100 means balance on these reports, these are friends from the Crawford report. 100 means a balanced state. So we have supply that's less than balanced. We have constrained supply, and we also have constrained demand. So we have a situation where we have almost a balanced state in the valley, which is Pinal County and Maricopa County, a little less than 100. We have some cities in the valley that are in a seller's market, some that are in a buyer's market, but overall slightly a buyer's market, almost at balance. So we have very equal leverage for buyers and sellers, unless you go out to the outlying areas, which we'll show you here in a moment. And on this
All right,
screen, go ahead, Chase.
yeah, proves what Jeff said. We are below, if you look at the right-hand part of the graph, we are below that balanced line. So we are in a buyer's market, one of the four in the last 24 years. So we do have a slightly uptick there at the end of the graph, but we are still below that balanced line, which is indicating that we are in fact in a balanced market. I'm sorry, a buyer's market here in Phoenix.
And a lot of buyers, here's the key point, they're buying now because they know if they buy right now and the rates are at 7 and it goes down into the lower 6s or perhaps the 5s in the future, they can always refinance. You have options. So that's why people are in the game here in Phoenix.
All right, this chart here shows the sellers markets, the buyers markets, and balance. So there's a lot of different municipalities here in Phoenix. So some are in a seller's market, some are in a buyer's market based on supply and demand. The ones in green, you could see Anthem, El Mirage, Chandler. Those are the top sellers markets with that Crawford Market Index number being over 100. You can see 167, 160. So those are really in a seller's market, right? Those areas. And then the areas down in blue, the Goodyear, Queen Creek, Surprise, those areas are below that 100 Crawford Market Index number. And so those are the ones that are in a buyer's market. And as Jeff mentioned earlier, those are kind of the outlier areas, right? A little bit outside of central Phoenix area. So those are where those buyer's markets are at. And those are where oftentimes you can get great deals right now.
Yep. And coming down the home stretch, my friends, you can see another graphic here. You can see the seller's markets on the left, buyer's markets on the right. Straight down the middle, we have some balanced markets, but it's really up to us to be able to determine with you, every municipality, where it's sitting, the trends that are happening, so we can better negotiate on your behalf. That's our job. We're really good at it. Also, the median sales price is at 459.5, which is still below the high of June of 2022. And so we expect that this year, if everything goes the way we think it will, it'll slowly go up this year, and the rates most certainly will probably slowly go down. So when rates slowly go down, prices will inch up as well. So now's a good time to buy. And finally, I want to bring up something here. A lot of people are like, well, Phoenix is too expensive. Well, actually, if you take the 5% annual appreciation rate way back from '01 and you extrapolate that all until today, we would have about a $443,000 median sales price. Well, right now we're sitting at 459.5 or almost 460. And that's not that big of a difference. So the reason being is we had many years where we were undervalued. In 2006, we got hammered, and it didn't take until like 2019 to recover the losses from 2006. So we were undervalued for a long time. Now we're a little bit over that 5%, but not crazy over. So we just wanted to make sure you guys understood that this is still a great place to buy, and we have great labor and great diversity of economy here. It's a great place to live. So we look forward to serving you guys. And be sure to look us up, get a hold of us, and we can take care of you whether you're a buyer or seller. We'd love to help you out. Right, Chase?
100%. We're here for you. Let us know. Give us a call. We can talk through your options.
Awesome. Have a great day, everybody.